This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachordes. Thanks for joining us at XM.com. Fears of global contagion from the worsening crisis in China's property sector continue to weigh heavily on sentiment at the start of trading on Monday, as markets panicked about the possibility of Evergrande defaulting on its debt. Shares in the Chinese property giant plummeted again in Hong Kong on Monday, pulling the Hang Seng Index to near one-year lows. In Australia, the S&P/ASX 200 index closed down more than 2% as mining stocks were sold off on the growing threat of a collapse in Evergrande, which could push China's already slowing construction industry into a full-blown crisis. The Aussie was last down almost 0.5% against its U.S. counterpart, while the dollar index was up 0.2%, extending last week's strong gains to a fresh 4-week high. The safe haven Japanese yen and Swiss franc were also firmer across the board on Monday, as the prospect of Evergrande's debt crisis becoming China's Lehman moment sparked a flight to safety. While it's so far unclear how contagious Evergrande's possible collapse could be to the global economy, it certainly got Wall Street investors spooked. The S&P 500 just posted its second straight week of declines, and the E-mini futures for the major U.S. indices were pointing to losses of more than 1% at today's open. The sell-off could intensify tomorrow when Chinese and Japanese markets reopen, following today's bank holiday in both countries. The gradual exit of central banks around the world from their emergency stimulus is likely exacerbating the risk-off trades from the China jitters. The U.S. Federal Reserve will probably take another step towards tapering when it announces its latest policy decision on Wednesday, with FOMC members potentially bringing forward their rate hike predictions from 2023 to 2022. The Bank of England's notably more hawkish tone of late doesn't appear to have done sterling any favors. The pound has slumped to a 4-week low versus the US dollar. Many traders have been paring back their bullish bets on the currency despite expectations of an earlier than anticipated rate hike by the Bank of England. The Canadian dollar was also on edge on Monday as Canadians go to the polls today to elect a new government. Should Prime Minister Justin Trudeau manage to hold on to power, the Loonie could get a significant lift. This is today's Daily Market Comment. Thanks for joining us at XM.com.